I had the pleasure of meeting most of you during the introduction part of the Mastermind Entrepreneurial Group. It was a pleasure. My name is Nathan Wilson. I'm a certified Profit First professional. There's a book, Profit First. Encourage you guys to start there with Square One. Great resources. We're going to talk a little bit here about entrepreneurship, and that's what business owners are, is entrepreneurs. I love the word entrepreneur. I think it's a cool word. It's French. It's an economic word. Of course, I graduated with economics, so it's perfect for me. But loosely translated, it means an adventurer. And for somebody that's owned a business for a few decades, I could say being a business owner is everything of an adventure. It's fun, it's thrilling, and sometimes it's a little dangerous. And I feel like you're going to bond with me on that word entrepreneur and really kind of embrace it as being an adventurer. In fact, I tend to say owning a business in America today is the last frontier. I mean, they used to say Alaska was the last frontier, and we're going to go into the wilderness and we're going to conquer the unknown and tame the wilderness. And now with Google Earth and GPS, there's less and less of that wildness around, and that's why I think the entrepreneurship world is that last frontier. So we're going to take a journey together. We're going to take a hike, if you will, down this journey that we're going to take together. So although the entrepreneur, it's been kind of statistically proven that we are more comfortable with risk than the average person. We seem to have this knack for working without a safety net, all the while providing that very safety net to those that work for us. Have you thought about that? But though we are comfortable working without a safety net, we would like a little confidence in our operations, and that comes down to knowing your numbers. Knowing your numbers is survival. But it's often a mystery because a lot of business owners have a trade and they're good at their trade. But their trade often isn't being a bookkeeper or a CPA or a number cruncher. And so there's this rub, if you will. But knowing the numbers is survival, but here's where we encounter kind of our first problem. Any of these reports, profit and loss statement, balance sheet, tax return, they're all various forms of accounting. Well, if you actually look at the definition of accounting, it says the recording and reporting of an event. Everything about that is past tense. It's already happened. So trying to manage or forecast your cash flow off of a traditional report like a profit and loss statement is like going on a hike and somebody comes up and gives you a map of where you've already been. You see how that's the problem that we're facing? And that leads to not getting good information. And it creates kind of a problem there with how our system works with the traditional accounting. So the reason why this formula creates a problem for us is it's a backwards formula. We have sales minus expenses equals profit. That's kind of our external problem, is we're giving this formula of sales minus expenses equals profit. Well, in human psychology, we're taught that what is put first in the list is most important, and what is put last in the list is least important. You with me on that? Yeah. So for anybody that's a foodie, I'm going to pick on a foodie. Let's use the example of fried chicken, for example. Let's say that's your favorite meal, is homemade prepped fried chicken, right? And maybe you just closed a big business deal, maybe it was your birthday, and somebody special cooks you your special meal. Remember I said this next time you get to eat that, and you sit down, because there's probably some fried chicken, there's a dinner roll, there's some green beans and corn, and of course salad, because salad is healthy, we're supposed to eat that. But what do you put on your plate first? It's the fried chicken. It's not the salad, right? It's the fried chicken is what you put on your plate first, because that is what is most important. So the problem with sales minus expenses and profit is left over is when we focus on what's most important, we focus on what's first on the list, which is sales. You know, my money problems would just go away if my company had more revenue. If I just sold more stuff, my problems would go away. But maybe it's not always apparent on how you can drive sales. Maybe that's a little bit of a mystery. So then naturally we go to what's second in line, which is expenses. So if I want sales to go up, I need to spend more money. I need to hire that extra staff member that goes out and tells the community how great my product is for those I serve. Or I need to increase my marketing budget. So we're managing increasing expenses to try to drive sales. And therein lies the problem. And that comes very self-evident when I take on a new entrepreneur to consult. You know, sometimes the conversation goes like this, you know, it's like, you know, business is pretty good. You know, last year we hit $1 million. I'm like, okay, all right. Tell me what that means. Well, we sold $1 million of products or services. Okay, well, I guess that's cool. $1 million is a big number. Sounds fun to say. So tell me, how much did you take home? $50,000. Okay, well, there's the problem. You don't own $1 million company. You own a $50,000 company. Because it's not what you make, it's what you keep that matters. And that's where this external problem really comes home to us, is what we're really after is the profit. And it's last in line. It's almost like it's an event. You know, it's around this time of year in April or May that we get the call from our tax preparer, our CPA, and he's like, hey, you know, John, you turned a $40,000 profit. Wow, that's great. I don't have $40,000 in the bank, but profit's good, so I'm glad I turned a $40,000 profit. Business as usual. It's almost like an event. It's something that's left over at the end, which is profit. And that's what's backwards about this, because this is an external kind of bookkeeping, you know, cash flow, kind of nerdy kind of language here. But as business owners, we bring this stuff home. We live with the uncertainty and the worry way after working hours are over. In fact, many of you have probably experienced, you wake up next to it the next morning. And if you've owned a business for 1 year or 20, I can tell you, you know from experience, that when you're in that state of worry and uncertainty, you make bad business decisions. You make short-term business decisions and you're not thinking it through. And so that's where we bring this external problem back home. So it's interesting, I heard the conversation when we were starting this morning. Somebody, I forget who it was, that said, you know, there's an awful lot of business consultants out there that have never built a business. And that's a valid statement to make. Is, you know, how do you know you're getting some level of expertise? When it comes to entrepreneurship, it takes one to know one. I started my first business over 25 years ago at 15 years old. My dad wanted me to go to college and said he wasn't going to pay for it. So I learned about being an entrepreneur at a very early age. And currently, I own 4 enterprises. One of them is an investment advisory company. Traditional retirement planning and financial management. A second one is an insurance agency. Of course, the one we're talking about today is a profitability advisor. That's coaching other entrepreneurs on how to put profit first and implement the profit first cash flow system. And a fourth is a real estate company. And people often ask me that. The very first question is, how in the world do you manage that? And I manage it with a profit first cash flow system. It's my map. It's my dashboard. It tells me everything I need to know about which company is going in what direction. And of course, taxes is a big thing. So being a certified tax specialist, I like to say profit first combined with that allows you to stay ahead of that tax curve and avoid those nasty conversations. But this is the heart of the profit first formula. It's a little bit of order shifting, which may not seem like a big deal, but it's a big deal. Sales minus profit equals expenses. You get the revolutionary idea on that? Sales minus profit equals expenses. Because we went into this business, whatever business you're in, to turn a profit. Because guess what? If you don't turn a profit, you're not going to be able to serve the customers you want to serve with your product or your service. So if you believe in your product and your service, and you think it betters the lives of the customers you serve, you owe it to your customers to turn a profit so you can continue to deliver that product or the service to your marketplace. So sales minus profit equals expenses is the formula. So we're going to go on a little hike today. I mentioned, entrepreneurship is an adventure. This was a hike I took here back in September. And, there's a couple key elements that make hiking work. And we're going to kind of go through some of those things and those tools on things you pack. And so I'm going to introduce to you a guide that I had. He's first in line. His name is Mike. As any good guide, he's somebody is going first, that's been there before, that knows the trail. Who's next in line is Charlie, my dog. Charlie has his own backpack. He has to carry his own weight. And third in line is Lucas, my son. And what's interesting about Mike is he's somebody you would want on your team if the technology grid crashed. He's just comfortable being outdoors in the wilderness and being able to survive. But my wife was not so comfortable with me taking my 9-year-old son on a 3-night overnight camping trip in the wilderness with no cell phone connection or access to services. So she literally told Mike in front of me, the only reason I'm letting Lucas go into the woods is because you're going. You keep him safe. Right? And Mike had this really good saying. He said, he told my wife Andrea this, people don't just walk into the woods and die. It's a series of bad decisions. And isn't that so true in business? You don't just start business one day and fail the next week. Business failures are a series of bad decisions. And it comes down to not having the right tools along with you. So in camping terminologies, if you don't have a map and you go into the woods, that's a problem, right? If you don't have a compass, if you don't have a guide, that's a series of bad decisions that are preventable before you took that journey. So we're going to kind of go through this journey together here using this terminology. So one of the things that's important to understand about business is there's one source, but there's 4 portions, okay? So you don't just pack for a 3-day overnight camping trip and day 1 dump all your stuff out on the ground, just start rummaging through and eating your food, right? You've got more days to go. So the same thing applies with business. The part of the problem we have, traditional business owners have one bank account and all their revenue goes into that account and all of their expenses come out of that account. And it just looks like one big serving tray. If any of you have studied anything about dieting, from what I've read about diets, the only diets that work long term have one fundamental premise. They limit the portions. Whether it's Weight Watchers or Mediterranean, it's less about what you put on the plate and more about the size of the plate. Because see, our moms taught us, you better finish your plate. And if it's a big plate, you're going to finish that plate. And if it's a small plate, you're going to finish that plate. So in business, when you have all of your money coming into one income account, it looks like a big buffet of food, all you can eat. And you close a big deal. You close that big sale. And the first thing you think is, wow, you know what? Now I can hire that other employee. Now I can increase that marketing budget because it just looks like there's so much money there. What we had to learn on our trip is we literally had to go into this with a lot of strategic planning. You literally had to sit down and you're like, okay, let me think about that meal on that 3rd dinner night and let me make that portion and then start working backwards and separate it out into portions. And that's really what we're doing here, is we're going to use a term called bank balance accounting. Instead of trying to get you guys to be accountants and CPAs, which is not your trade, nor should it be if that's not your passion, we're going to teach you how to use just normal human behavior. Look at the bank and see how much money you have. It's that simple. The difference is we're going to create 4 more bank accounts, okay? And we're going to name them profit, owner's pay, tax, and then operating expenses. Okay, so If you wanted to hire that extra employee or increase that marketing budget, now you're just looking at the smaller plate of operating expenses. You've got less to work with there. It changes your focus. Now, income account becomes a one-way valve. Money comes in, no expenses go out. Only twice a month do your pre-allocated percentages flow out of the income account and into the profit, owner's pay, tax, and operating expenses. So it's a pretty easy system to manage once it gets rolling. The reason this works is it's a very foundational economic principle. It's called Parkinson's Law. Parkinson was a British economist, and he stated a very foundational principle that expenditures rise to the level of income. Maybe you guys, before you started your business, worked a regular steady paycheck job, and you got a raise, and it feels real good for about 6 weeks. And then you wonder where it went. Why you still can't save any money? Because your expenditures rise to the level of income. There's another principle, especially for business owners. Work expands to fill the time allotted for it. You know? So I sometimes encounter an entrepreneur that's got overtime syndrome. They fundamentally believe that if they got to work 12 hours a day, 6 days a week, or nothing will get done. The business will not survive. But truth be told, according to Parkinson's Law, and I'm a living testament to it, if you literally constricted that workday to 8 hours a day, you're still going to get everything done. You're probably going to make a little bit better decisions on how you spend your time, and you're probably going to exercise the power of no. No, I don't need to do that because there's something else that's more important and I have a certain amount of time to get it done. It's Parkinson's Law. And then for those of you that have staff, this was a lesson I had to learn the hard way as an entrepreneur myself. In office organizations, the number of subordinates increases at a fixed rate regardless of the amount of work that is available. And I was driving over the Christmas break through Arizona back to Colorado, and I had a lot of behind the wheel time. And I got to thinking about the direction one of my enterprises was going and the current team I had on board. And I realized I needed to make some changes coming back. So I kind of downsized my team. And what I learned was after that event, one person is now doing the job that 3 people were doing. And he doesn't work 5 days a week. Because the 3 people that I had on board, they're not going to tell their boss, hey, I don't really have enough to do, but be here about 3 hours a day. Do you mind if I just crank that out in 3 hours and go home? They're not going to say that. They're going to expand their work to the amount of time they have available to do it. You get how that works? So this can work for you as well when you're packing your portions by simply limiting or segregating what you have available for each task. You learn to get it done with the resources you have. One click. Perfect. So when you allocate, the order is everything. Remember when I said, if you have that nice fried chicken and dinner rolls and salad, you go for what's important first, which is the fried chicken. Very important that order is everything. So when deposits flow into the income, you allocate out by a set percentages. So in basic algebra, we've learned that you can isolate 2 variables and you could solve for a third unknown. So if we don't know what your sales are going to be this month, we can't isolate what your revenue is going to be. So what we do isolate is how you divide that revenue according to percentages. So whether you have a $10,000 month or a $20,000 month, a set percentage goes into these 4 categories, but profit comes off the top. Because it's like just reducing that plate size just one size smaller, you learn to work with a little bit less, even if that percentage just starts off small. Now I know small business owners, and this happened to me when I started one of my enterprises, is we're the last to get paid. The employees don't show up to work if they don't get their paycheck, but we keep doing it, right? So we're going to create that second category called owner's pay, because you are your most valuable employee. You may say somebody else is, well, I got my salesperson or I got my operations person. But if you weren't there, they wouldn't even have a job. So you are the most important employee. You need to take your owner's pay after profit. And then digging out of a tax hole, that's depressing. You got to make money and pay taxes on that money to turn around and take what's left over to pay last year's taxes, and that is depressing. So we're going to bring that equation to the front. We're going to take taxes as a percentage off the top and not wait until somebody tells us what our tax bill is months into the next year. What's left over, what's last, is operating expenses. That's what we have to learn to run the operation on, and it works. I got to tell you, when I did this, I had all the operating expenses coming out of the same account of income. So one of the first steps we've got to do is you've got to call all those vendors that you have ACHs or automatic debits coming out of your account, and you got to tell them, hey, quit taking money out of this account. You got to take money out of this new account down here. Well, naturally you start saying, what is that vendor? And what do they do for me? And are we using them? And do they make us any money? And that active exercise pays for the system right up front because you're just questioning what your bills are and cutting the ones that don't matter. I learned this. We have a software or a vendor called DocuSign. It's an electronic, contract signing thing. And I'm noticing, hey, we're paying $150 a month to DocuSign. And I had one of my staff members call him up, and I'm like, when was the last time we used DocuSign? 18 months ago. Reason why is because one of our other vendor relationships allowed us to use their DocuSign account, and we've been using it for free for 18 months. And so that's $1,800 that just came off the budget just by the fact that I had to move those operating expenses to the other account. And so this is a formula that you can get in the book, and it just shows you income is the black line, and then the faded little gray line is costs. And when you have sales minus expenses equals profit, what happens is revenue rises, so do expenses. I think I heard one of you say that. It's like, hey, the more money I make, the more I seem to spend, right? But the problem is revenue decreases, expenses don't follow. One of the most gut-wrenching things to do as an entrepreneur is to lay somebody off. That's tough. And if you've ever had to, set foot on that bridge because your revenue is dropping, you will do everything you can to avoid that conversation to the point where you're chipping in the money you made last year, you're chipping in the home equity line of credit on your house, you're rating your retirement accounts, because as revenue drops, expenses don't follow. And then taxes are always this nasty aftermarket surprise. So at this point, we've talked about the entrepreneur is the adventurer. This is the character that's on the journey. And we're going to introduce our second character here, which is Bart the borrowing bear. Bears aren't these aggressive creatures. They're just like hungry teenagers, right? And Bart the borrowing bear is something that we had to be aware of when we were camping. Because it doesn't matter how many miles you walked or how hot you are or how strong your desire is to just lounge around the campfire. There's one more step you got to take. And that's you got to go string whatever's in your backpack that smells yummy to you, smells really yummy to Bart the borrowing bear. And you got to go take that backpack about 100 yards away from where you're sleeping. And see, bears can climb trees. So it's kind of a trick. You got to take a line, you got to pitch it over the branch of this tree, and then you got to take the other end of the line, you got to pitch it over the branch on this tree, and you got to create a loop, and you put the backpack on it, and then you pull the lines out, and the backpack goes up in the middle of the two trees. And that may seem kind of simple, but when you're tired, or your hands are cold, or the light is failing, it's a little bit difficult to do. But you've got to get it away. And that's the other real valuable part of the system, is we've got to take some of these things out of sight, out of mind. So out of the 5 bank accounts, once we allocate to profit, owner's pay, taxes, and operating expenses, the owner's pay and operating expenses can still be at your main number 1 bank. But you take that profit and those taxes and you get them out of there. You go put them at a second bank. You go put them in a little place that's a little harder to get, right? You don't want them to be easily accessible, because then you become Bart the borrowing bear and you start borrowing money for your business from yourself, from the taxes, and from your profit. So one of the things Mike taught me, I'm a huge chocolate fiend. I just love chocolate. It tastes good. It makes me happy. I hear there's some scientific evidence behind that, but I don't really care, because that's reason enough for me. So here's some chocolate. But one of the things that Mike taught me about packing chocolate is you got to pack it at the bottom of your pack, right? Because if you're on a 3-mile hike and you're hot, you're going to be tempted to go raid the chocolate. But if you have it at the bottom, and all your gear's on top, you make it a little less accessible. And that's why we take the money and remove it from the equation on profit and tax. So some of the basics of camping or backpacking is the same as entrepreneurial success. Have a map. It's best if you have a guide. I mean, you could do this if you're a diehard devotee to do it yourself. But if you want to follow the route of somebody that's successfully done it before, having a guide, pack portions, the order is everything, and have a plan. And that's true for business as well. You know, it's interesting about human psychology. You know, if you break it down, it can get kind of simple. When we started this trail, it was 14 miles long. We plan on spending about 3 nights out there. And right at the start of the trail is this sign. The Big South Bridge is washed out in 7 miles. 99% of the population says, well, there's a big obstacle in the way that we can't get past, so I can't get from point A to point B. I'm not going to even try. But Mike doesn't think that way. He thinks, well, you know, let's think about this. I bet that river's been there for thousands of years. And I bet you human civilization has been crossing that river for thousands of years, way before they built that bridge and long after that bridge is washed out. People don't need bridges to cross rivers. So he had a plan. And as a result, we're the only people on that trail for 3 days we didn't see another human being. And believe me, in northern Colorado, in the wilderness, that's kind of hard to do sometimes, right? But they saw this obstacle and they didn't go around it. So Mike had a plan. And if you take a look at this picture here, this is how he addressed this obstacle. This is my son Lucas, and you can see here he's standing on a rock and he's holding his shoes because that river was really cold. And so when we approached this wide river that was very cold, instead of just focusing on, wow, that's a hard obstacle to attack, Mike looked at it like, you see that rock right over there? You're going to have 3 steps in that cold water and then you're going to get on that rock. That's number 1. Number 2, the rock right after that. Number 3, number 4 is you're on the other side. So we had a plan of simple steps. And that's what we call this is the cash flow management system. It's a system that is managing your cash flow. And what we do to start that, it's a few simple steps, is we go in there and we assess what your current allocation percentage is going towards profit, owner's comp, tax, and expenses. Let's just see where you currently are starting. The next thing we do is we guide you towards targeted profitability percentages of companies like yours. See, that's one of the huge advantages of a certified profit first professional is we're nationwide. So some advisor somewhere in the nation has worked with a company in your industry that achieved profitability. So we already know what profit looks like in your company, in your sector, in your industry. And we simply guide your current allocation percentages to those target allocation percentages of those profitable companies. And then you get to thrive with a cash flow management system that guarantees your profitability day one, gets ahead of those nasty tax surprises. But what I find is the most valuable is it makes business decisions so much easier. So what you'll get out of this system, how this impacts and betters your life, is it transforms your business from a cash-eating monster to a money-making machine. And gives you that peace of mind and that clarity of being able to rest easy at night, knowing where your numbers are and where your company's going. Ultimately, I want the entrepreneur, you, to become the hero. But to do that, you got to become a cash flow pro. So, if any of you have ever studied movie scripts, they all follow a pretty basic formula. You know, they kind of introduce the main character, and then maybe they introduce the villain or what have you. But at the end of the day, the hero has a couple common traits. One, they have a problem. And, you know, to pick on the Star Wars fans out there, you know, Luke Skywalker, obviously the main character, was the hero. And his problem was he didn't like the dark side, but he also questioned his ability to do anything about it. And that's where Yoda comes in and teaches him the Force, but he also teaches him how to use the Force, right? So movies that don't work are movies where the hero wakes up one day and says, you know what, I got this problem. And the next day they just go fix it, and then the credits roll. People don't watch those movies. And the reason why is they're not realistic. Because if the hero could fix their own problem, they wouldn't have a problem in the first place. So what has to happen for movies to work is the hero has to have somebody that challenges them to take action, right? And then that way the hero gets to overcome the obstacle and transform into something unique and better. And that's what I hope to do today, is just to be that catalyst of change that you can take some action, right? And there's some few things you can do with that. You can obviously download the book, but while you're waiting to get that, you can send me an email and I'll get you the core concepts of Profit First. And that's on this back page here. I mean, right there. Would you like the core concepts of Profit First? I'll get that to you. The other is a 30-minute discovery call. You know, and that is, hey, maybe this information sounds real great in a group setting, but you got 2 or 3 questions that you need answered in your specific situation to see if this works for you. And I'd love to get you those answers. So discovery call. The snapshot report is to really help you fill in those numbers. And that would be a key action step, because what the snapshot assessment does is it tells you the value, the financial opportunities that this is going to bring you, and put the money in your pocket. The Profitability Action and Report system that's what I use to run my enterprises. It's the more dynamic version that allows you to be able to put your numbers in, do your allocations twice a month, and see exactly where your company's at, but more important to me is where it's going. And that's the Profitability Report and Action Plan. Of course, I'd love to be available as your profitability guide, as somebody that's been there before and done this successfully and can navigate those obstacles that you're currently facing. But it takes some sort of action to be able to have some sort of result. And without that, an object at rest tends to stay at rest. So hopefully I've been able to be that catalyst of change and can bring you from your current situation to that profitable life that you deserve to live.